Hey everyone, welcome back to the channel. If you're new here, please hit subscribe and tap like so you don't miss my breakdowns of stocks that can make big moves. Today, we're going to talk about OPI, ticker OPI. This video is for anyone thinking of investing in this company and wants to know what it does, why the stock has been moving, and what to watch closely before making a decision. OPI stands for Office Properties Income Trust. It is a real estate investment trust that owns and manages office properties across the United States. It leases space to tenants, many of them with investment-grade credit ratings under long-term net lease agreements. That means many of the operating costs are paid by the tenants. The portfolio includes millions of square feet of office space in dozens of states, and in Washington, D.C., the goal is to provide stable income from rent and potential capital appreciation from the properties themselves. Recently, OPI has been in the news because of its financial results and some big changes. In the second quarter of 2025, it reported revenue of about $114 million, a drop of about 7% compared with the same quarter the year before. Over the last 12 months, its total revenue has been around $466 million, also down year over year. This decline shows that OPI is facing headwinds in its core business. On top of that, its net margin has been negative, with significant losses. Another event that caught investors' attention was the suspension of the quarterly dividend on common shares. The company decided to stop paying its regular distribution to preserve cash. For a REIT, this is a big deal because dividends are usually the main attraction for income investors. Preserving cash can be prudent, but it can also signal financial pressure. On the positive side, about 60% of OPI's income comes from tenants with investment-grade credit ratings. That suggests some stability in tenant quality even as the office market struggles. It is also managed by the RMR Group, an experienced firm in commercial real estate. That can give investors some confidence in how the portfolio is run. The company has also undertaken debt refinancing actions to extend maturities and manage its liquidity, which may be part of why the stock has shown bursts of strength recently. If you're thinking about investing, you need to be aware of the risks. Revenue is still declining. Vacancies, tenant downsizing, or renegotiated leases can hurt cash flow. The suspension of the dividend is a red flag for many because it removes the immediate income stream and signals stress. Losses are large and the net margin is deeply negative. This means OPI is burning cash and may need additional financing or asset sales, or even issuing new equity, which can dilute existing shareholders. Debt is another issue. REITs rely on leverage and high interest rates make refinancing more expensive. If OPI has to roll over debt at higher rates, its profitability will suffer. And valuation versus expectations is tricky. People who buy hoping for a big dividend yield could be disappointed if the distribution is not restored soon. There are also reasons why some people still watch OPI. It has a diversified portfolio. It has a base of higher quality tenants. It is actively managing its debt. If the office market stabilizes and demand for space stops falling, OPI could rebuild its cash flow and eventually restore a dividend. If that happens at a time when its share price is still depressed, the upside could be meaningful. But none of that is guaranteed. For anyone evaluating OPI, these are the types of signals worth watching. Does occupancy improve? Do renewals and new leases start to stabilize revenue? Does operating cash flow turn positive again? Does management restore a sustainable dividend? How does the debt profile look after refinancing, and are interest expenses manageable? Are institutions or insiders accumulating shares, which might indicate confidence in a turnaround? And how do broader market factors like interest rates, inflation, and the demand for office space evolve over time? My own view is that OPI is a high-risk situation. It might have room to recover if the office market steadies, if it can attract and retain good tenants, if it improves income and restores the dividend. But I would not make it a core holding without seeing real improvements. If I were to take a position, it would be small, and I would be prepared for volatility and for the possibility of further downside before any recovery. Wrapping up, OPI combines some attractive elements like a diverse property base, creditworthy tenants, and experienced management with some heavy challenges like declining revenue, losses, suspended dividend, and high debt. It could be a turnaround story, or it could continue to struggle. If you liked this breakdown, hit like, subscribe, and comment what you think. Do you believe OPI can recover, or is it too risky? Thanks for watching. Stay alert, stay informed, and always do your own research. And just to be clear, I am not a financial advisor, and nothing in this video is a recommendation to buy or sell any security. This is simply my take based on what I found for you to use in your own due diligence.